Welcome to Perspectives with Wenchi Yu, where we discuss Trump 2.0's policies and politics and their implications for Asia, China, Taiwan, and beyond. As UK-China relations enter a fragile fall, Prime Minister Keir Starmer has become the first British leader in 8 years to visit Beijing, reviving high-level economic dialogue after a prolonged ice age. In a world where middle powers, from the UK and Canada to Germany, are courting China to hedge against a less predictable United States, seeking growth, green technology, and market access without sliding into dependence. I speak with Fraser Howie, a leading China financial analyst and author who has spent decades working in and studying China's markets, best known as the co-author of 3 influential books on the Chinese financial system. Fraser offers a heart-won view of what this new era of China as alternative really looks like beneath the headlines. Let's hear Fraser's perspective. Welcome, Fraser. We're excited about today's episode because there's a lot of time-sensitive issues. But most importantly, I want to talk a little bit about your personal career, how long you've been doing this finance UK-China over the last few decades.
I first went to the Shanghai Stock Exchange in 1992 when it was based in a hotel ballroom. And so over 30 years or so, I've been involved in some level with the Chinese stock market. And in the late 90s, I lived in Beijing. I worked at CICC. I was there for about 6 years. And then I came down to Hong Kong, worked in Hong Kong and Singapore with international banks, doing a lot of investment in China. And so a very regular engagement with the regulators, with markets in China. And of course, I've written a number of books on the Chinese financial system, which I think, although they were written 15 years ago or so now, I think still are so pretty essential to try and understand what's going on in China. Because China has got obviously so much bigger, and the financial system has certainly got much, much bigger, far more complicated than it ever was when I was at CICC or CLSA and the other firms I worked with. But at the same time, some of those core problems are very much there because so much of the finance is interwoven with the politics. And as we know, sadly, the politics has not changed. And it's certainly not improved over the past 30 years.
Well, let's start from the beginning. So where are you originally from and what took you to Beijing?
Sure. So I'm originally from Scotland, where I actually live now. I came back a few years ago because of COVID-related family issues. I went to Cambridge and studied physics, and I had some Hong Kong friends, and I went out to visit them during one holiday and was fascinated by the place. And that really got me a bug for Asia and for China. And then through the 90s, I traveled a lot. I worked and traveled through China and Hong Kong. I went to Beijing to study and then ended up working there. And again, even though there was much promise post-WTO of financial market reform in China in the early noughts, there were very few jobs. So I came back to work in Hong Kong for a few years. And then for about 20 years, I worked in Singapore.
So you spent more time watching China from Singapore.
More time watching China from Singapore, but at the same time, involved in businesses which were heavily invested in China and had a lot to do with the Chinese market. So very much a front seat of what it was like to actually do things in China. And, you know, as I often say to people, how does the money get across the border? Because you would often find people talk about the Chinese economy and they sort of wave their hands about foreign flows or Chinese flows. And I'd say, but that sort of sounds fine, but it's a restricted currency. So what actually do you mean by Chinese money coming out or going in? How is that actually happening? And in particular, how does it really affect genuine institutional investors? The fact that there are black markets and there are all sorts of funny trade invoicing, that's fine if you're a billionaire wanting to get his money out, but that doesn't really help Fidelity or Templeton or JP Morgan if they're actually trying to do meaningful financial investment into China.
So one key question currently people like to ask is how investable is China?
When you talk about investability in China, China is clearly very investable in many ways. There's a huge amount of FDI that's gone in over the years across a whole host of sectors in real investment, real businesses, as well as financial flows. But I think often when you talk about investability, you need to say, what industry am I in? There's opening of sort of the capital account and opening of investor mechanisms to invest in the stock markets or the bond markets really didn't come to the fore until post the global financial crisis. There were some early steps that really started in 2003, but they were relatively small. Approvals were slow. And so what you saw, particularly for a lot of financial investors and portfolios type of investors, is that you had this clearly booming Chinese economy. And yet your ability to tap into that was very, very limited. So therefore, China was uninvestable for many people because China had not opened the windows and the facilities to allow them to invest.
And this is specifically about the financial market, right?
Your financial markets were certainly way behind because ultimately financial market flows, they're not really employing that many people. And certainly when China was opening up in the 90s, they were looking to be the factory of the world, of course. So they're looking to employ people. You know, they're wanting your Volkswagen or whoever to come in, chemicals company or whatever, to come in, invest a load of money, build a factory, employ 5,000 people. And so the mayors and, you know, any city across China is going to be very keen to do that. He's going to provide land to build a park, to build a factory. Whereas in financial flows, that was much more slower to happen. And of course, one of the things which can't be forgotten, the Chinese leaders are very focused on stability. And the lessons they took from the Asian financial crisis, not unreasonably perhaps.
That was the 97 one, right? That's not...
Yeah, so we're going by ancient history to many people. China was very concerned that by opening their markets up, as many Southeast Asian countries had done in the 90s, they too would be at the mercy of foreign flows, which they couldn't control, they couldn't understand, they couldn't influence. And so they were very slow to move forward with financial liberalization. In the late 90s, in 99, I started working at CICC, China International Capital Corp, which was the first joint venture investment bank in China between Morgan Stanley and China Construction Bank. The CICC was a joint venture striving to become a state-owned enterprise. Okay, so Morgan Stanley saw this as a way to tap into this booming pool of IPOs. It was certainly more and more IPOs, national champions coming through, China Mobile, China Telecom, PetroChina. You know, so in that sense, there really was real deals and big companies coming forward, and that which made them a lot of money, certainly made CICC a lot of money. But I think they misunderstood what they were getting into. The China Construction Bank and Morgan Stanley were coming at it from very different perspectives. The Chinese side was looking at this as a way of sucking in technology, of know-how, to learn from the foreign banks. Now you see 25 years later or so that foreign firms, they now actually can control a joint venture, or they can have a wholly owned entity. They simply have nowhere near the power and the leverage and the presence that domestic firms have. Because China, of course, post-WTO, used a lot of non-tariff barriers through approvals or whatever to limit investment in China. So this is the other side of the investability aspect of China. One is simply, is there a window or opportunity to invest in my field of a business? But even when you get there, if you do get approval, are the returns really going to be commensurate with what you see? And I remember very clearly, soon after I started working in Hong Kong, this was in the early noughts, about 03 or 04, we had an offsite company management and some China people about, you know, opportunities in Shanghai. And I remember the boss of the firm was looking out the window saying, hey, look at all this building that's happening. You know, the place is booming. There must be something we could do. This was 2004. And I said, sure, it's booming, but we're not a construction company. We're a small, undercapitalized overseas stockbroker. And so where we're going to tap into this is not by coming to Shanghai and trying to do something in Shanghai or tapping into that marketplace. And I think that took a long time for many executives to really figure that out, or even simply just accept that was the case. They couldn't get away from the fact that China was indeed growing then at 10%. And some areas were growing even more, but they weren't growing in areas that foreign capital could invest in.
Do you think there is this concern about foreigners in general, or it's simply that China is uncomfortable about controlling its own economy?
There's always this connection or mirror to the politics. Is Xi Jinping concerned about control of Chinese society, or is he concerned about outside influences in Chinese society? The answers are yes. And that is mirrored in the economics as well. We have Made in China 2025, this drive towards self-sufficiency, this picking of winners to try and focus on technologies of the future. Those things were there early on. It would be wrong to say that China hasn't changed, but over Xi Jinping's reign, 13 years, pushed the state's interest and the planned economy interest. Now, it's not a planned economy in the way that the Soviet Union was a planned economy, or the way that China used to be a planned economy, but it's certainly not one that's open to foreigners in the way that many thought it would develop if we go back 20, 25 years or so.
Around what time did you realize that China wasn't going to take the Western market route?
If you were actually in China trying to do things, you figured that out very early. A few years after WTO, or even before that, I realized that things were not going to go as smoothly as many people thought. The trouble is, that person doesn't understand how much effort is required to achieve failure in China. That you could have a tremendous number of meetings and proposals, and you seem to be doing things. There was activity, but there ended up actually being no productivity, because so much of this came back to political approval at the top. So even if
say more about that. Like, what is this hesitation from the Chinese political leadership? It seems like they want it, but they don't want it as fast as bad, or they are not sure. What's the mentality there?
It certainly controls a major part. Again, the Asian financial crisis, by opening, particularly if you look at the capital account, and an easy flow of money into China, and then more importantly, out of China, that's destabilizing. It can be fine if that's taken over a long period of time. It's the sudden change. It's the rate of change is the problem. So China was always, particularly in financial flows, they were always very concerned of somehow losing control, especially when it came to the large state-owned enterprises, because many of these large state-owned enterprises that listed in the late 90s or into the, from 2000 to 2010 or so, the big banks, PetroChina, Sinopec, these types of companies, they were wary as well that somehow assets would be stripped in the way that they were in Russia from the Soviet Union, that Chinese would appear and so actually privatize these large entities and the state would lose out. So there would be a loss of state assets. There was also just a fear that foreigners would get in and so under the bonnet as well. And you can argue whether this is a Chinese characteristic, but it's very much a Marxist-Leninist characteristic.
It depends on how you look at it, right? If you talk to some Chinese officials, they would just say, be patient, don't rush. This is the way Chinese do things. But as you say, it does not look like they are completely comfortable losing any control of their economy. Now, fast forward 2025, 2026, we see that, the world, especially the Western world, the more liberal economies have also changed their view of China, from engagement with a lot of hope to de-risking and diversification. And then, all of a sudden, because of Trump's unpredictability as well as his trade and tariffs policy, a lot of economies are looking for alternatives. Let's talk about the UK. Prime Minister Starmer seemed to want to have a different relationship with China. What does that mean? Do you feel like this is opening up another possibility, or just the UK trying to find anything that could potentially bring the UK more economic opportunities?
Okay, so there's a number of strands all working there to varying degrees. Firstly, I would say this should go without saying, whatever you may think of the politics of the human rights, it's a hugely important country in the world. And there's no reason why leaders should not be going there and having dialogue and speaking to them.
Well, it's too big to be ignored. Yeah, for sure.
You ignore it. That's right. This is not North Korea. You simply cannot ignore China. While it may give some solace and say, well, I will not go to China. Well, maybe you don't need to go, but if you're the prime minister or if you're a president, the head of state, people need to go to China and engage with China. So in that sense, I think it's important that Starmer did go. Britain has a particular relationship with China because of Hong Kong. Britain is the home to, I don't know the exact number, I think it's about 150,000 mainland students who come to Britain to study. In the tertiary, so actually not just in the tertiary, but throughout the education system. And so in that sense, Britain does have a large PRC diaspora population here. Most of them are not a problem. They're coming here, they spend their money, they study, they may stay here and work, they may go home. But there's also problems that come along with that. We've seen that with transnational repression against Hong Kong migrants or Hong Kong exiles who have come here after the protests of 2019. So Britain needs to be clearly engaged. So I don't fault Starmer for going. And he is looking, because of Trump, and this is where we cannot discuss anything economically without thinking about Trump and the dislocations. I will give Trump credit for what I call opening the Pandora's box of China and basically saying, look, China's ripping us off. Now, whether they were exactly ripping you off, over, by that time, about 17 years of WTO engagement, China had clearly not been playing on a level playing field through state subsidies, through non-tariff barriers. And that Trump 1 administration did allow many countries to say, yeah, this is an uneven relationship with China. We need to think about where it could be tariffs part of it. We need to think about re-engaging and limiting Chinese investment in some ways, or trying to argue for better terms. We then had COVID, which again only caused further problems in that relationship. And here we are in 2026 with China with a $1.2 trillion surplus, which is a direct economic consequence of a political system that values production and just making stuff at any cost. So there is still a pushback there and a fear of China's domination in that sphere. But at the same time, middle powers, Canada being one, Carney's already made it very clear. Starmer is going along with that now, having come out of the EU. Countries are saying, okay, well, we can't rely on the US as we used to. That relationship has clearly changed, however much we may still have in common. And so therefore we need to say, is China going to give us some opportunity, or is that going to help drive our own growth? But I think, though, if we were 25 years ago, you could say, oh, China can grow. China's growing at 10% a year, and maybe it's got something really good to offer us. And I think the trouble is now, hey, we've now got 25 years experience of WTO. Expectations of UK growth being boosted by anything from China are very, very limited.
I want to hear more about that because China has grown tremendously. China, it is much more than a market. It's an exporter, technology, know-how, and some of the top companies in many sectors. So does that mean its economic relationship with middle power could be different?
Well, very much different. So I'm in the islands, and all around me, because there's basically a lot of hills, sheep, and not many people, there's also a lot of wind turbines. And China is one of the leading producers of wind turbines. And I see them coming in at the port nearby. But these are monstrous, incredible pieces of engineering. And China has developed a lot themselves, installed them domestically. They're obviously looking to garner that market, and you know, they're very competitive on price. China has made a deliberate policy to put itself in the center of those supply chains. If it was, you know, Denmark does windmills as well. But if it was, you know, another democracy, an ally of ours, even if it was Japan or if it was Korea or obviously Australia or a European country, I would not have no real problem. But the trouble is that if you're buying that sort of key engineering, sort of power industry engineering from a country which is most certainly not our friend, then there has to be questions raised about, well, how does the programming work? Do they have remote access to this? Can they turn them off? Where is the national security aspects around this infrastructure? And this is the problem that you now have with China. That yes, China is bringing a whole host of high-tech devices that particularly the Europeans and the Brits want, you know, clean energy, whether it be EVs, wind turbines. But then you say, but there are national security concerns around these. Are we comfortable with them? Where is that data going? Do they have control over it? Our politicians, in most cases, are simply not well versed on this. And they also struggled to go along with this idea, well, we need this green technology and they're the most cost effective and we're already stretched because we have an aging population, we have high budget deficits. This is the cheapest way to do it. It's a difficult problem to solve. But I think what's very important to remember is, and this is not my line, this goes back to the 1930s, the US consul in Germany said, there are no such things as economic-only relationships with totalitarian regimes. It's not simply a case of buying something from China, okay? If you bring in Chinese tech into your national grid or to your telecommunications, you are to some degree beholden to China. Now, perhaps there's a middle ground where the software is ours, you know, the infrastructure is theirs, the hardware is theirs, and that clearly involves sort of joined up government thinking about the different aspects, bringing security services in, but then again, where are the companies which are able to provide that software, etc. And you also clearly need engineers as well to maintain those things. Are they Chinese? Are they going to be trained by Chinese companies here? There's a whole host of things. It's more complicated than it was 25 years ago, where the Chinese may have just been selling you stuff, sort of cheap goods, or indeed foreign companies going to China, lowering their production costs, and then selling that back globally. So the Chinese picture is much more complicated than it was before.
All of these concerns derive from this distrust in China, right? Why is there such distrust in China?
So there's the national security you've mentioned. Then, of course, there's a $1.2 trillion trade surplus. China is making a lot of stuff. We're not making much stuff. And so we seem to be just a taker of Chinese goods. And so that's a concern. There's also an experience as well. I mean, of course, that distrust is not universal across Britain. There are still a number of areas, and we can get to that, where there is still a willingness or just, I would say, a willful blindness about China. But if you look at the history of Chinese investment in Britain, it's pretty patchy. And you can look at they already tried to invest in the nuclear energy sector in Britain, which did not go particularly well, and they eventually had to leave it. They bought a steel furnace in Britain, which they looked to close down, and the government needed to step in to ensure that the furnaces were kept running. I think it cost the British government something like, or the British taxpayer, £250 million to keep the furnaces going, because once they cool down, you basically are unable to start them again. And so the promise of Chinese investment has often simply not delivered the jobs or the returns that have been wanted. It comes back to this idea of if you can't invest in China because you don't have that window to invest, or if your returns in China are lower than they are in Europe or Eastern Europe, or developing Asia or whatever, or India, then does it matter if you invest in China? And I think it's very difficult for people to say, we don't need to be in China. Because you think, I have to be in China. How can I not be in China? And yet actually the economics says you don't need to be in China because there's so much work and the returns are so limited that it's actually not worth the effort. And I think that's being true in Britain. It's very difficult to look at success stories of Chinese investment, whether it be in property, whether it be in, I'm talking about property developments here, or whether it be in, like the steel sector or other sectors. The returns just have not followed the promises.
So essentially what you're arguing is that despite China's enormous market and its economy, it's just not a place where it's easy to do business with. On the scale of comparing China to, let's say, India, do you feel the same way about India?
It's interesting because I actually spent a lot of time in the Indian markets as well. I did a lot of business in India. I have to say, India is chaotic in a way that China is not. But at the same time, you had many more companies who simply business plans seem to be a lot simpler. You'd go to a Chinese company who you thought did X, and you also find they were running hotels and they wanted to be a bank as well, and they had all sorts of sidelines going on. And you thought, so where is the real core business here? Because the management or the individual founder was spreading himself so widely. Often I found that Indian companies were actually much more focused on their core businesses. So in that sense, India's got its problems as well. But in many times, India did seem like a better opportunity than China. So if it's difficult for foreigners, the economic return has not followed the promise, and China is a difficult place to do business, don't take my word for it, but ask Chinese companies. You look at EV manufacturers, you look at solar panels, whatever. These companies make no money. And if they do make money, it's generally limited to literally one or two particular behemoth companies. And so China is domestically a highly cutthroat environment. So it's difficult for Chinese companies to make money. 10 years ago, we could have been doing a podcast on, Evergrande, the largest private real estate company, and just being marveling at the size of what they were able to do. Now we marvel at their $300 billion in debt that is unpaid.
Decades ago, when the world was eager to do business with China, one is the potential of its market. The other is also more idealist. We're hoping to shape Chinese economy, right? Want to make China a free market, a great place, just like the West that we can do business with. UK, has a very historically strong financial sector. So some have said that the UK can leverage its financial services strength to shape norms or standards in China-linked finance. But it seems like there's some recent movement that indicates that the UK is more like accommodating Chinese capital. Do you want to say more about that?
When you read the readouts of Starmer's visit, it's like it was 20 years ago. So there's all sorts of areas within the Chinese financial world that could be improved in some ways, whether it be risk management aspect, pension funds, and retiree type of options in an aging society. A huge amount of their household financial assets are still basically in cash. If a good pension industry or fund management industry could get hold, then you get better returns and everyone benefits from that. And that was the pitch that many big asset managers in Britain, not so much now investment banks from Britain, but certainly big asset managers. And of course, Hong Kong is a British colony, had all those services. And so I think there was a real belief that those companies, and certainly British companies, could play a leading role in developing things around pension systems. But those promises didn't necessarily come to naught but the foreign influence and the foreign ability to affect change was much smaller than they thought. Obviously, the City of London still being a very key global financial centre. It's in the centre of the world's time zone. So you're in the centre of sort of global flows and global markets and the global workday. London wants to be a place where, as China goes overseas with its investment and with its capital, it wants to be a hub for that where people can come and meet. But this comes back to the problem that China is walled off still. It has strict financial controls, and indeed, although there are windows to allow some money to come in and some money to go out, the reality is that it's still very difficult, and that what you've ended up doing is you've had a situation that the city has basically bended its knee to China and gone along with what China wants to do, rather than actually the city or being able to really influence how China opens up.
I just read that the FRC, the Financial Reporting Council, which is the UK's independent regulator for corporate reporting, audit, and governance, which is to promote transparency and integrity in business, just proposes that listing standards regarding audits to be lowered in order to attract Chinese listings. What's the rationale behind it?
Apart from madness on their part, it's hard to tell. They're obviously wanting more listings. London as a stock exchange has seen falling listings, and they've been unable to grab some high-profile listings. They've gone to New York, and this has been a challenge.
Is it because of Brexit, or what's the reason?
No, the reality is that you seem to have 3 stock markets: Tokyo, Hong Kong, and New York. And that's it. So you have this concentration, although that New York is the number of listed companies in New York has fallen as well because there's private equity is becoming more important in financial markets. But I think London has been squeezed. Brexit, I don't think has necessarily added to that. It's not helped it, but I don't think it's necessarily increased that increased that rate of decline. But the FRC is saying, hey, let's get more companies listing. Again, that will have minimal direct impact on, jobs in the UK, for instance. But it will just get some more interest in the market, something else for people to invest. But their proposed solution is exactly the opposite of what the hope of 20, 25 years ago was, that developed markets such as Britain, well-regulated markets, that by engaging with China, we would help raise Chinese standards. And these indeed was exactly the things that China themselves said they wanted. They understood that their market was too casino-like, it was Wild West, too much speculative activity. Instead of saying, we will hold you to the high standards we hold our own companies, we will actually allow Chinese audits and auditor standards to be used. It's ignoring the fact that corruption and abuse of power is rife in China. You've historically had large numbers of scandals of auditing abuse and simply lies on corporate accounts, where the auditor's been paid off or whatever. So the history's going against you. Why do we think it's any different now? And so for the regulator here to say, let's lower our standards, first of all, I think the return they would get, even if they did get some listings, is going to be limited. What that means is that British investors, overseas investors, institutional investors will buy into these companies, and bottom line is they'll be defrauded. At some point, these companies will blow up, and I say we've had a long experience of companies going under because their accounts were completely fictitious.
The message I read as an outsider is the UK feels desperate, right? Whether it's the resumption of the dialogue or this act of lowering auditing standard in order to get more Chinese companies to be listed, it feels like the UK needs Chinese capital or business investment.
I hate to say the word. I think everyone must shrivel when their own government, whether you like them or support them or not, you say that your country is desperate. But I think in many ways, Starmer is desperate. He's looking at ways to boost growth. He goes to China. He says, there must be something we can do. And this is a grab for. There has been what they call a London-Shanghai Stock Connect, which is an incidental sort of program. It shares the name with the Hong Kong Shanghai and Hong Kong Shenzhen Stock Connect, which has been hugely successful, but is a very different program in nature and is providing a very different role. But I think Starmer is desperate. He is looking for ways. It reflects the paucity of other things they can do. And yet this is something at least the British does control. They don't need to convince the Chinese of anything. They don't need to try and get into China or get any favors from China. They're saying, if we just look the other way, or we'll just sign off on this and not worry, then maybe we'll get some benefit. But I think it actually reflects how little China has to offer the UK as well.
How much is because of the US? Does the US become a factor in how countries like the UK and Canada all of a sudden turning to China?
Of course.
Even
of
if,
course.
yeah.
I follow the US media very closely because you have to nowadays. There's no way you can. There is no business as usual from America anymore. But it's interesting when I hear American commentators speaking amongst themselves. And I think one thing which most of them fail to appreciate is how much trust America has lost from its allies, from its direct, military allies, i.e. NATO. So that's Britain, most of the EU. It's really sad because that's going to take a long time to build up. Even if you disagree with tariffs, if you bring tariffs in, we can live with them. Let's figure out, but let's at least have rules to play by. Today, we're recording this literally within an hour of the tariffs now being thrown out by the Supreme Court. So you come back to whether it be Starmer, you come back to Carney, you come back to these other middle powers. Our natural ally is America, and we're never going to agree on everything with America, but, it's on 70%. Whereas with China, maybe we're only going to agree with about 3 out of 10. So it's not a case of somehow replacing America with China. That's not the option here. These middle countries are struggling because they're saying, I don't want dependency on an erratic US. But at the same time, I know I can't be erratic with China, but are there things that China can do? And I think some of the politicians are trying to maybe cozy up to China to try and say to the US, hey, come back to me. They're saying, look, we're actually a much better ally. And if you don't, we'll actually get, do more things with China. But the reality is China is not a solution to the European or the Canadian America problem.
With two bad options, it seems like that's what's offered. What do you do, right? I mean, it's very easy to criticize them and say, don't go to the other bad option. But what are the alternatives?
Well, for many years now, I've suggested we try and club together and build a time machine and go back to some point where it made a lot more sense and run the future again. But it's very difficult. It's very difficult because they are bad options. And I think it requires good leadership. I think in many cases it requires new leadership because I think many of the politicians who have often come through, particularly on the Labour side, in the UK at least, they've not come from a business background. They just don't do business. They're not necessarily comfortable with business people, and they're struggling to try and understand how that business environment's changed. The EU has reached out and signed a free trade agreement with 4 countries in Latin America. They've done that with Canada as well. And the EU has signed something that is something called SAFE, that it's a fund for common defence driven by the Ukraine war. And so the EU has agreed terms with Canada for Canada to be a non-EU member of this fund. And yet, incredibly, the UK was unable to agree terms with the EU. What you will see is that more of these middle powers will try and work together and not block out America. America is simply too dynamic an economy. Its influence is too great to somehow say we can decouple from America. But I think many of these middle powers will try and hedge their bets in some ways. It's also very, very early. Carney's come in on a wave of pushing back on America, and clearly the Canadians rightly were very upset at how Trump spoke to them and how many of the GOP sort of fell in line. But also Carney's going to get voted in or out based on whether he produces for Canadians.
It's a very critical moment for every country now because you need a new strategy, new idea, new policy. You cannot just continue the way it is. And so everyone's taking big risks, right? And nobody knows if that works or not. In some way, this pivoting back to China is also a big risk. I'm sure everyone is aware of that. But unless they can come up with new ideas, it's probably very hard.
What I'm very comfortable, though, is China is not the solution to the America problem.
So perhaps there could be a balance way. The earlier engagement with China was out of inexperience, naivete, however you call it. Now that there is better understanding of China, the engagement could be more sophisticated, more conditioned.
I think that's true. There's no reason that not to be the case. And if you go back, to the 90s, the number of people who had been to China was much smaller. The number of people who had done business in China was non-existent. We now have a generation of business people who've got a lot of experience, have been through this process. We have much better reporting over the years. There's lots of people who know the problems of doing business in China. The UK now has about, I think, is it 300,000 people have left Hong Kong. And about 170,000 of them have come to the UK. I just hope that Starmer realizes that the UK now has this tremendous body of,
knowledge and asset. Yeah.
Language skills, many of them professional qualification. They are people who can add literally from the day they arrive in the UK.
Yeah. Well, I do want to ask, right? Like going back to let's just call it the first phase of engagement, UK-China engagement. You had said that the bank, HSBC, a major global bank, is driving much of UK's China and Hong Kong policy. What does that mean?
That's the answer to the question of who is driving British government policy. The answer often gets defaulted to that Treasury is driving policy as opposed to the Foreign Office. So therefore, it's economics, it's money that's making decisions rather than human rights issues or anything else that may be coming out of the Foreign Office. And who's driving the Treasury? Well, Britain's largest bank is HSBC, and they make about equal amount of profit in Hong Kong as they do in Britain. They make much, much less in China, non-Hong Kong. But HSBC moved their, although they're still listed in Hong Kong, before the handover, they moved their legal base to London. So indeed, HSBC is a very successful British bank operating in Hong Kong and China. And so they're very keen to protect that position. But that's also a problem for Britain, because we see with the national security law, we see post the 2019 protests, what's happened in Hong Kong. If it's a British bank, the British government to some extent is on the line here to help support it and bail it out if there's a problem. Do we really want to do that? Because now it's a Hong Kong Chinese bank. On the readout from the Prime Minister's office, it was Keir Starmer's statement, it was then Peter Kyle, the business secretary, and then it was the chairman of HSBC. So HSBC is seen as a central part of British-China negotiation. That's a misleading interpretation of actually the engagement. They are very focused on Hong Kong. Such a large company with such a vested interest, I think, is detrimental in some ways. Because what's good for HSBC may not necessarily be good for the British economy.
You could argue that if this relationship, HSBC was the largest part of it, then probably it makes some sense. But if it's no longer the case, other businesses or other factors should also play into how this relationship is constructed. Peter Mandelson was very instrumental in the Labour Party and UK's relationship with China. How did that happen?
The stuff that's been written up on Peter Mandelson coming out of the Epstein files, I think it's 2010. I think he left office in 2010, 2011. And it is so typical of that time that here is China, who had been growing at double-digit growth rates. You've had the global financial crisis. China has this massive stimulus. The headline is China saves the world. China just ramps up this credit engine. I think it's easy to forget that from 15 years ago, but that was the place to go. And Mandelson has long been known as basically, how shall we say, is a difficult relationship with money and power. And so he sets up his global consultancy. And it's no surprise to me that Chinese are looking to seek him out, and vice versa. He is looking to see what can be done in China. That was true of everybody was doing that in 2010, 2011. Western economies were still suffering from global financial crisis, and here China continues to boom. So I think he has been instrumental here. It's interesting, though, that for the reporting, he seemed to have achieved very little. So for all his brand recognition, for all his name, he's had very little success. Which again comes back to my point, lots of activity without productivity. There's a lot needed to be done to achieve failure in China. You can have a lot of meetings and introduce a lot of people and set up an office, and yet actually tangible results can be very few and far between. But having said that, this is now Mandelson and others like him. You now have this more integrated global network of this revolving door between business or consultancy and government. So you have this network of connections who are forever jockeying and playing around, looking for opportunities. And if you're a business person, that's not a bad thing. But he is not then the best person to be then helping either Labour in power or out of power or any other government. Again, not necessarily the best person to be speaking advice as to how to deal with China or how to approach China.
As we know how China operates, that's also a time when they're very aggressive in trying to engage with key personalities like Peter Mandelson and other equivalents in other countries, and China is not the only one. I think a lot of countries.
This is partly an environment that we have created in the West broadly, or in liberal markets, liberal democratic societies. We have this revolving door between politics and economics. And I don't think we like to think about making the idea that these things are independent and companies are there to make profit and politicians do politics. But the reality is that, lobbying in the States or whatever it may be, tremendous influence that business has on the politicians who are meant to be putting the rules together to regulate them. And so there's that often unhealthy connection. For the Chinese as well, remember, China has gone through over this, and again, people have written books about it, over this 25, 30-year period, you've had periods of China being more open to the world as well, for money coming in, but then also for Chinese companies going out. Often a common complaint or observation is that Chinese companies are very poor at trying to understand how non-Chinese societies operate, and certainly have great difficulty understanding non-Chinese politics. And so they're going for someone like Mandelson, who clearly was very influential in British politics, had all the contacts, and so it's not surprising that he was an attractive source person or point person to try and get into the UK or connect with others.
Now that we've had a lot more knowledge and experience dealing with each other, what do you think the next few years will look like?
Well, like I said, I think I would hope there's going to be a much more realistic engagement with China and understand that, sure, speak to China, do investment where you can, but let's keep national security very important. Let's understand the danger of too concentrated supply chains, diversifying sources. And that's not just like in rare earths are the most obvious one, but I think it's something it's estimated like 70 to 90% of, emergency room medicines are dependent on China. And you think, well, is it 70 or is it 90? But frankly, either number is too big. Some simple things like Tylenol, paracetamol, they're basically all made in China or if not in India. Remember, it wasn't so long ago we talked about decoupling and diversifying supply chains. I think that needs to go on, because smaller countries, middle countries, Britain, Canada, need to realize that they're going to have to work together more. Friendshoring, these sort of ideas need to come to the floor. Work with China where you can. It's not you just disengage. In the British case, you can come and invest, but we're going to expect certain returns. And if you're wanting to build a factory here, then you're employing British workers. The same sort of terms that China demanded when Volkswagen and other companies went into China all the way back in the 80s. You need to bring your technology.
And skills and knowledge transfer. I think that's actually...
And again, China is no longer just a producer of cheap goods. They have knowledge of battery and electric vehicles. You can make those things just as easily here as there, but it's a different way of doing something. It's partly copying the Chinese. If you just simply carry on with how we've been engaging with China, then your industrial base is going to be hollowed out. And so you do therefore have this very hard, you either decide, are we going to have a hard block with China and try and copy things? Are we going to put up tariffs? Or do we do something the next few years? I think it's going to be a mixture of all those things, and it's going to vary from industry to industry. Some stuff I'll happily buy from China, okay? Other areas I'll develop my own businesses with tariffs or restrictions on Chinese imports. And on other businesses, you can have genuine joint ventures or technology transfer and tougher rules. But it's not simply going to be the free trade model, which everyone just defaulted to and used as a panacea for any problems that we encounter.
We've all learned lessons from the past few decades. I hope the UK government is tapping into your expertise. Are they talking to you, asking for your advice?
Only very slightly. But I used to speak to a lot of high-level CEOs because although I worked in finance, because I had written books, I had this odd opportunity where although I was notionally a competitor, because I was an author as well on some key books on finance, they would actually come and speak to me sort of off the record. And I found that almost to a man, they all ignored me. Well, they would accept what I said and they would agree with me, but they would say, yeah, but you don't understand. We need to do more in China. And I said, but you're not going to make any money. And they said, oh, yeah, we know that, but we just need to be in China. And I'm thinking, well, why do you need to be in China? And they could never really answer that particularly well. So comes back to this investability. It's like, can we actually do something in China? We as our company, whether it be financial services, or again, if Chinese investment is coming to Britain, what is actually going to make a difference to Britain and actually growth to Britain, which is the mantra of the Labour government.
Yeah, it sounds like we, of course, can do something with China. It's just how to do it and what. It just requires much more sophisticated knowledge and know-how rather than blind engagement.
It's also a case of not just looking at this through an economic lens. Particularly for Britain, you have Jimmy Lai, a British citizen, still in jail in Hong Kong, sentenced in a 20-year sentence. Britain has very little influence there. And in the same way, we can't hang our entire economic policy on what HSBC says. We can't hang our entire Chinese engagement on Jimmy Lai either. But clearly, Britain has a responsibility in Hong Kong in a way that other countries do not. Brazil has no responsibility for Hong Kong. Like Australia has no responsibility. Britain, though, is home to 170,000 Hong Kongers who have fled that life because they don't want to be ruled under an NSL. So Britain, in that sense, is a particular... Some may look at them as limitations or drawbacks economically, but the reality is, and as we've seen this with China, and there's a mass diplomacy through COVID, economics and politics are intrinsically linked when you deal with China. And therefore, you need to engage China on that basis and understand that.
It's just even more important to understand the complexity of China. China knows the West or the world much better than vice versa. With that, thank you so much, Fraser. Is China investable? For Fraser Howie, investability depends heavily on sector and channel. Trump 2.0 policies, especially tariffs, have made allies question U.S. reliability, pushing middle powers like the UK to hedge with limited engagement with China and more friendshoring amongst themselves. While it may be tempting to pivot toward China, Howie argues for principled, conditional engagement and urges policymakers to draw on the expertise of the UK's large Chinese diaspora to craft more informed, realistic China policies. This is Perspectives with Wenchi Yu, where we analyze the policies and political strategies of Trump 2.0 and their implications for Asia, China, Taiwan, and beyond. Thank you for watching and listening. We value your feedback. Please subscribe to our YouTube channel and podcast. See you next time.